Hello traders and welcome to another video review. Today is Wednesday, February 9th, 2022. Let's start with the Forex calendar. Some data had been published already. Again, those data were from the Japan. However, the importance of this data is not that big to move the market significantly in either direction. And during the London session, we got the trade balance data from the Germany release at 8 o'clock. As you can see, they shrinked from 10.8 billion euro to 6.8 billion euro. We got the industrial production data from the Italy, scheduled for release at 10 o'clock, and the 50-year bond auction scheduled for release at 11:30. During the New York session, we don't have too much data scheduled for release as well. We have only wholesale inventories, crude oil inventories for all of you crude oil traders. These data are scheduled for release at 4:30, and the FOMC member Loretta Meister will give a speech at 6 p.m. So pretty much quiet day today on the markets. However, it's still there might be something that will still make the market move today. So you never know, as it is on the financial markets. Let's start our technical part with the cable. British pound to American dollar daily time frame chart. As we can see, very nice move out of the channel, breakout above the key technical resistance 1.3515, then breakout again. 61% of this wave up has been retraced 1.3384, and again up we go. The recent high was made at the level of 1.3627, which is just above the technical resistance at 1.3605. Since then, the market, as you can see, is consolidating just above the support at 1.3515 again. So this is the level that we should keep an eye on, definitely. The momentum is like kind of a positive. However, it's still hovering just above the neutral level of 50. So please keep an eye on the momentum, because if there is a breakout back down towards the negative territory, and the bears will again move the market lower, for example below the Monday low of 1.3489, then of course we will hit 61% is no longer applicable anymore. Then we will of course hit 1.3412, and there is surely enough one more technical support located at 1.3360, 1.3359, somewhere around this level. And that would mean as well that the market is back to the channel, so that breakout would be then a force breakout. However, on the other side, we need to see the level of 1.3605 as the key intraday technical resistance. Breakout above this level will open the road towards 1.37 and 50. So this move here, this wave up, might be then continued. So let's take a look now at the US dollar to the Canadian dollar to see what is going on there. US dollar to the Canadian dollar is still trading inside of the range. As we can see here, the 61% of the Fibonacci retracement of the last wave down, located at 1.2768, has been unconquered yet. So we got two attempts to break above this level. However, as we can see, there is no close above 1.2768. We can move a little bit lower our technical resistance, because there's a very interesting level here, 1.2812. As you can see, this level 1.2813, and this is 1.2796, 15 pips miss, and this is like 25 pips miss. So around this level, let me just put the blue arrow here. Around this level, we should see an increased market activity. Okay, so once we break above 1.2768, this level is the next level of interest for, of course, bulls. The current range is 1.2768 towards 1.2647. This is the range, neutral range. Market is ranging right now. Technical support, the next technical support is 1.2609. We can add one more support for all of you intraday traders. Let me just put it here. Around the level of 1.2570 is the third technical support. The next technical support, the key technical support that we should pay attention to is the level of, let me just put it here. I will make it thicker so everyone can see. 1.2450, that's the next technical support. This one is no longer applicable, so if we break below 1.2570 we surely get to 1.2450. so that's the US dollar to the Canadian dollar. For this for the time of the making this analysis, this market is trendless. However, there is a slight skew towards the rejection of 61% of the Fibonacci retracement, and of course continuation to the down move. So if we are talking about the US dollar to the Canadian dollar, let's take a look at oil. Crude oil data are scheduled for this 4:30 today. So let's see what is going on here. As we can see, we got still the target for the wave 5. This is the ideal target according to the Fibonacci projections levels, somewhere around 98.82, $99. This is the target for the wave 5. However, the market is currently moving lower after the local high. Let me just put the technical line here. After the local high at the level of $93, let me just take a look at this. 93.16 has been made. So this coordinates must be changed slightly. There you go. 93.16 is the top of this move here in the wave 5. However, it looks like free wave movement, so maybe instead of the full-blown impulsive progression in wave 5 towards $99, we will have some sort of the ending diagonal. So this is pretty much possible as well, but we should wait. We should wait for the market to tell us what it wants to do. The nearest technical support 88.23. the other technical supports are 84.88, 84 and 10. As you can see here on the RSI indicator, we are trading in the extremely overbought market conditions. Now this market is cooling off and the conditions are dropping a little bit lower. Current level is 62 points, but it's still a strong momentum, so that might be only a pullback. That might be only a pullback. If this pullback will not be bigger than 9.81%, then there is no overbalance and we should expect wave 5 continuation towards the projected target levels. So that's the crude oil. Let's take a look at Bitcoin. The Bitcoin finally hit the key short-term technical resistance and the supply zone, together with the 61% Fibonacci retracement of this move to the downside, this down wave. And as we can see, we ended this this bounce with that candle here. This is a classical kind of a pin bar candle. This is long legged doji, which means that market is not that much confident if it should continue the up move. So right now it's very important to keep an eye on the developments on Bitcoin, because if this bounce, it's above 35% of the bounce in terms of the price, not Fibonacci retracements. If this bounce is capped here, then of course we will drop towards 41,188 or even 39,540. Those technical supports are very important for the bulls. However, if we break in that fashion, in that manner, with that kind of a candle, big red candle closing away from the 45,000, 4,029, this is a very bullish indication. As you can see, we still have the room on RSI to jump towards the extremely overbought conditions. Right now the RSI is at 61 points. To hit 70, we could easily hit 51,846 before the extremely overbought conditions at the daily time frame chart are going to be occur, right? So please keep an eye on this current zone here that is being played out by the market participants. This is the key market zone. This is the key Fibonacci retracement, supply zone, technical resistance. It all depends on how this zone will be played by the market participants right now. Very important time, very important place. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.